Yesterday we were talking about how fast the market had risen, and that when you do see the market move so quickly that it isn't a healthy sign. And since the 4th of October we have seen a very strong risk rally. We've seen stocks like Rio Tinto up by 13%, Fortescue has managed a gain of 16%, the Australian market is up by 9%, the US market, the S&P 500 up by 9%, and the Aussie dollar has gained 7%. So we have seen a strong unwinding of that risk rally. In fact, Rio Tinto down by 5.5% today. Fortescue down by a massive 9.2%, and BHP Billiton, which releases its first quarter production results tomorrow, down by 3.3%. Of course, all eyes once again on those headlines coming out of Europe. We did see Germany's finance minister coming out to say that the EU summit is not a solution for the European debt crisis. And then we also saw the German Chancellor coming out, and Angela Merkel coming out to say that not all the problems are going to be solved by the EU summit. So once again, I guess Germany in focus, as well as those European debt problems. The market looking towards that EU summit this weekend for hopefully some solutions, but it's unlikely that that's going to be coming. The RBA minutes were also watched by the market as well, and I guess it's all dependent on those inflation numbers for the third quarter coming out next week. So that's going to be watched very closely, and if we do see some pretty tame inflation numbers released next week, then the market's really going to increase the possibility that we'll see a rate cut on Melbourne Cup Day.
Some of the iron ore players that we've got in our market, the likes of BHP, Rio and Fortescue, why such steep falls, particularly Fortescue, as you mentioned, closing down over 9%?
If we have a look at those iron ore miners, absolutely smashed today. And as you mentioned, someone who, a group that focuses just on iron ore and isn't diversified across other commodities like Fortescue, saw the deepest falls. And that's really because of the fall, not only that we've seen in commodity prices, but especially iron ore prices overnight. In fact, if we have a look at the CME iron ore prices for January, we saw a decrease of 9% overnight. That's quite a heavy fall. That means since the beginning of September, we've seen iron ore prices at January contract falling by a massive 22%. Of course, things weren't helped by those numbers coming out of China, and the market was watching the GDP numbers. We did see GDP coming in at 9.1%. The market was expecting to see 9.3%, and that 9.1% figure means that's the slowest rate of growth that we've seen from China in 2 years. Of course, the flip side of that was that industrial production and retail sales numbers actually beat expectations. We saw industrial production coming in at 13.8% versus an expectation of 13.4%, and retail sales coming in at 17.7%. The market was expecting to see growth of 17% there. So I guess the market focusing in on that GDP number, although industrial production and retail sales from China did remain strong, and of course that tumble that we've seen in iron ore prices over the last 6 weeks.
Billy, I wanted to get your thoughts on the price movement. Telstra obviously one of the big movers today, big shining light, but interesting to see late in the session really came back in. I mean, it was up over 1% for most of the session, but closed up just 2 cents, an increase of about 0.6%.
We did see Telstra stock doing well, but it has done well all week on expectations that this NBN vote will go through. So the $11 billion deal voted through by shareholders, and I guess the market next watching the ACCC concerns and working those out. But altogether, it should be a positive for Telstra. It will help to underpin the dividend payment, and the dividend payment of 28 cents confirmed for FY12. We are expecting to see cash flow increasing from Telstra over the next 3 to 5 years. And of course, if we have a look at the independent Grant Samuel report saying that, you know, if the vote didn't go through, that Telstra would have been $4.7 billion worse off having to compete against the NBN network without this $11 billion deal. So altogether, I think it's expectations of a possible capital return, and also this payment really helping to underpin the dividend that Telstra provides, that has seen quite a bit of support in Telstra's share price yesterday, which was very much a risk-on day, and then today, naturally, Telstra outperforming on a risk-off day as defensives were in favour. So Telstra shares reaching a one-year high today, doing very well.
From one of our viewers, James from Perth yesterday, he was interested to know about a stock he holds, Iris Market Technology. I promised I'd ask you your thoughts on the stock. What are your thoughts?
I guess if we have a look at Iris shares, they have been falling quite substantially over the last 3 months. But if we have a look at its underlying business, this is a business which really trades technology. So a lot of the brokers in Australia and New Zealand use the Iris platforms to get information as well as execute shares. So if you have a look at the business model, it's a fixed cost model where they have a fixed cost base and then they leverage off that. So it is important to get good volumes to flow through, so they do see some fat margins, but we have seen volumes falling because of market conditions. So what you want to see is a bounce back in market conditions. They are trying to grow through acquisitions in South Africa as well as in Canada, and in that financial planning space as well, taking over Xplan and that acquisition of Xplan. So we are seeing sluggish revenues coming through from the broking side, but hopefully the wealth management area growing, and they are looking at a multi-market platform towards the end of this year as well. But as long as the market volumes are sluggish, unfortunately this stock isn't going to see a catalyst to turn around.